we're fielding calls from a balance of a range of clients, those that are wondering whether they should buy on weakness and those that are wondering whether it's too late to sell. And from our point of view, we've seen with the yellow, the umbrella movement previously, that this can be an opportunity to pick up good quality stocks on weakness.
Is that your belief right now, that is the right thing to do, that you shouldn't be, that this situation will indeed clear up and things hopefully will go back to normal in Hong Kong? Is that the base case?
I think we've crossed the Rubicon, which implies it's unlikely it'll go back to normal, however you want to describe that. But from a business point of view, we think that it's unlikely that the protests are going to undermine the longer-term future for Hong Kong as an offshore business centre for China. And hence, for good quality names outside the real estate sector, but for good quality names, we are comfortable buying on weakness, as we say.
Okay, so buying on weakness for the good quality names. Are these specifically the names that are the Chinese companies listed in Hong Kong? Are these specifically exposed to what's going on in China right now?
Yeah, if you look at from a market capitalization point of view, it's the Hong Kong listed China names which dominate the index, yes, as well as a sprinkling of other stocks that are focused on facilitating the electronic export trade, names like Tektronix and others. So there are other companies headquartered in Hong Kong, maybe they're manufacturing again in China. And they're the names that we have seen a lot of weakness. We have seen some weakness in the likes of the China banks, which is, we believe, unwarranted given the fundamentals in China at the moment. Yes, China is slowing, but that's been known for some time.
What about the impact on the financial sector? I was having a conversation with Bill Winters from Standard Chartered a few days ago, and he spoke about how the big banks, Standard Chartered, DBS, that have exposure to that market, some of the prominent Singapore banks, have not seen as much of an impact as some of the smaller financial institutions. Is that your sense as well, that things have not been disrupted at the top level?
Well, I'm sure Bill has greater insight, in terms of the impact on the small versus the medium versus the large banks within Hong Kong. But it is accurate to say that while we are very concerned about the impact on the business impact of the disruption for the Hong Kong banks, so far the guidance has been that the disruption has not had a dramatic effect on the actual business that were transacted. In actual fact, if we look at the mortgage market, we're in the midst of a mortgage price war in Hong Kong at the moment, which is actually boosting demand for mortgages. It's somewhat counterintuitive, given what we've seen on the TV screens, but overall, what the banks reported during the third quarter is that the outlook is uncertain, but business is continuing.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.